growth. The company is set to report earnings on Wednesday, February 4th. We'll keep a lookout for that one. And lastly, McDonald's BTIG analyst Peter Saleh upgraded the fast food giant to buy from neutral. He said it's now in the early innings of the lower income consumer recovery. And that would be thanks to the One Big Beautiful bill, which should lead to a $200 billion increase in tax refunds this year, or that's roughly $1,000 per person. On top of that, its new Cosmix beverage platform is expected to launch in the first half of 2026. And Saleh said that could be the next catalyst for U.S. same-store sales growth and transactions. Keep in mind, though, the street is somewhat mixed on this stock, with 22 buys, 19 holds, and 2 sell readings.
I want to get right to Hasbro CEO Chris.
Okay, that was a very odd commentary, and it really caught my eye, or my ear, I should say, as I was just checking on the market. I was just curious how things were going, and I just wanted to point out something she says. So this is sort of the game that media and the market can play on people. She said lower income consumers and this recovery. Well, that implies that there was a dip in low income consumers, um, in their participation as consumers at McDonald's, which is something that the McDonald's CEO, I guess, had talked about earlier in the year last year, or maybe it was even 2 years ago. Said that they were noticing this trend. Now, part of that trend is because they've been raising prices, and obviously people are getting poorer with monetary inflation and cost of living, et cetera, et cetera. But this comment, what really struck me, is she says that the lower income consumer recovery is fueled by the beverage, I guess, that they're going to be releasing, um, inspired this cosmic beverage brand, okay, which is odd. All right, a drive-through option, and then they're going to do. They're banking on the fact that this upcoming quarter is going to be, because of the big beautiful bill, there's going to be a tremendous amount of refunds. Well, wait a second. If we're talking about McDonald's banking on people having tax refunds to be able to afford their products, then that's a limited and very short term solution, because those refunds are going to run out, and then people are right back to where they were before the refund. But then the other issue is, if you need a tax refund to afford McDonald's, is that a sign of a strong economy? I think we have to take a look and see that this is just another example of the gap between regular people, the low income consumer, quote unquote, and the system. That, like, oh, don't worry, you'll be able to afford that Big Mac when you get your tax refund. McDonald's is not meant in its place in the economy. McDonald's is not Peter Luger's, okay? Peter Luger's, for those who don't know, famous steakhouse in New York City. McDonald's is not meant to be Peter Luger's. McDonald's is meant to be low income to medium income food option for people. It's the most famous brand amongst fast food. You could argue it is the staple of fast food, and fast food is a staple of low income uh, consumers because it's supposed to be cheap. And if we're talking even just casually about the concept of tax refunds aiding and abetting people's ability to purchase McDonald's, then McDonald's has lost its spot in this economy and its important role in this economy. And it also tells you that our system is absolutely fatally flawed, because this is absolutely not a good sign. Not a good sign at all. Yes, McDonald's had a good quarter. Yeah, McDonald's stock is still trading over 300. It's still over $300 a share. It's down a little bit today, but overall, yes, they've done well, and as they say, like, they've done well with the extra value meal and all this stuff, and it's mainly buy options on McDonald's. But then here's the other factor, right? If you transition your consumer base from low income consumer, which they say they need a recovery on, to a middle income consumer and a high income consumer, what does that mean? That means that per visit, The consumer is spending more money on McDonald's than what they did 5 years ago. So every trip to McDonald's costs more per consumer. So of course that is going to help. That's going to help with your profit margin because you're selling the same products, probably less meat on the bone, but you're able to charge more. Is that a good sign? How long is that trend going to last? How long is this going to be acceptable? And how many people are in position to waste $30 on a trip to McDonald's? I guess as long as Five Guys costs $45, or as long as Chipotle costs $50 or whatever, as long as these other brands that, middle income fast food, I guess, was catering to, as long as those brands are outpricing McDonald's, then I guess McDonald's can charge $30 a trip. But we got a problem here, folks, because this is not the role of McDonald's. And you have to wonder, in the long run, is this a great example of a coming issue with our entire economy? You tell me. Feel free to make comments, make suggestions, make complaints, like and subscribe. Thank you.